So what is the Aroon Indicator? Found on TradingView by going to Indicators and typing Aroon, Aroon. This is the one you need. When you first put it on, or it was for me, it defaulted to 14, but many traders use it at 25. So I changed it because those are the examples that I researched. So most technical indicators ask the same question. Where is price now relative to where it has been? Shandy asked a different question. How long ago did price make its last significant high or low? His theory was simple. If price is making new highs frequently, the uptrend is strong. If it's been a long time since the last new high, the uptrend is weakening, even if price is still elevated. The timing of highs and lows, he argued, is a leading signal, not the price itself, the time. That's a genuinely different way of going about things. It produces two lines, Aroon Up and Aroon Down, as can be seen here. I've coloured them green and red. They oscillate between 0 and 100. Aroon Up, the green one, measures how recently price made a new highest high within the chosen period of 25. Aroon Down does the opposite with the lower low. When Aroon Up is near 100, then a new highest high was made recently, so the uptrend is strong. The opposite, when Aroon Down is near 100, a new low was made recently. Downtrend is strong. When both are below 50, the kind of midpoint, neither highs or lows are forming. The market is ranging. You can see that around this point here. Simple in theory. As always though, the problems start in practice. So as I showed you earlier, this is the standard Aroon on a chart with 25 periods. Lines constantly crossing, and if you zoom out, a complete mishmash of ups and downs. Not sure what the hell I'm supposed to make out of all of that. And this is what Shandy's Dawn's Early Light actually looks like on a chart. The chart that is meant to show you the beginnings of a new trend is showing you nothing but noise. But that got me thinking, whereas before when I wrote a new version of an indicator and made it an oscillator, I thought, let's see if there's an oscillator version, and there is. Aroon Oscillator, it says new on TradingView. So these are them side by side. So it's Aroon Up minus Aroon Down into a single oscillating line. Above 0 bullish, below 0 bearish. And when it hovers near 0, it's ranging, as you can see kind of here. It's kind of cleaner, easier to read, same information. So we'll switch the other one off. Okay, that's better. But it's still counting candles, and a candle counter has no idea whether the move it just detected was institutional accumulation or a single spike caused by a news event. Both look identical. Both score 100. At this point, I'm going to show you a pulse flow alert. Dash came into our stack break bullish alert only a few hours ago while I was preparing for this video, and Dash is the chart we've been looking at. So let me add my institutional context as to how I set up this trade. The signal came in here at this fair value gap with a break of structure. The stack break had happened here slightly after. And I always wait for it to come back down into the fair value gap to grab that imbalance, to grab that liquidity before it goes up. Now let's bring in Aroon to this picture. Aroon is green but falling. That's indicating that the trend is possibly running out of steam. So now let this run forward. And as you can see, it's gone into profit already of around 5%. Slightly less than 5% in real terms. Aroon fell down and then reacted to the price going up. But at the time we had that signal, at the time I was looking to take this trade, Aroon was saying, possibly not. Because while pulse flow was reading where the money was, Aroon was counting how many candles since the last high. That is the difference between a time counter and a trading tool. So Aroon is a genuinely original idea. Measuring time rather than price is a different approach, and there's kind of logic around it. In a strongly trending market making higher highs, it does what it promises. But here is the problem. A clock does not care why a new high formed. A single aggressive candle or a liquidity sweep scores exactly the same on Aroon as a sustained institutional accumulation phase. 100 is 100. and Aroon has no way to distinguish between them. And the arbitrary period setting compounds the problem. The indicator defaults to 14. Most traders change it to 25 because they've watched videos where others did exactly the same thing. But there is no mathematical or institutional basis for that number. You adjust it until it fits your chart and call it a strategy. That is curve fitting, not edge. And the backtesting research is damning. Some studies describe it as no better than just flipping a coin. They say it cannot be used alone, and every source agrees on that fact. And in sideways markets, which is where markets spend the majority of their time, it generates false signals constantly. Shandy named it Dawn's Early Light because he believed it could spot new trends before anything else. A beautiful name for an indicator that counts candles and calls it a trend signal. Pulseflow does not count how long ago a new high or a new low was formed. It looks at EMA alignment for trend on a higher time frame, volume confirmation, BTC correlation, and institutional order flow to determine whether a trend is real or just noise. A new high means nothing without the context behind it, and that context is everything Aroon does not have. So Aroon measures time from the last high or low. Markets are not moved by time. They are moved by money. Okay, please would you subscribe, like and share. You can watch one of my other videos down here, and I'll catch you in the next one. Bye bye.